I'm Lin Nan. I'm associate professor at Cranard. I'm accounting professor. And I just want to briefly talk about one of my recent publications in the Accounting Review. It is a co-authored paper with Carlos Corona and Gaoqing Zhang, and we examined the interaction among different policies regarding banking industry. So in banking industry, most banks are subject to capital requirement. That is, banks, they are required to keep certain amount of capital inside, and the purpose of this requirement to make sure that they won't take too much risk. And on the other side, we also see that the SEC and regulators nowadays require more and more about higher accounting information quality. And our study found that if we improve the information quality, actually, we may end up in a situation that banks, in the presence of capital requirement, they actually become more aggressive in risk-taking, which is just the opposite of the regulator's intention. And the reason of this unexpected consequence is because, think about first, so the capital requirement, the capital ratio, the calculation is usually based on accounting information. And if the accounting information quality is very poor, then we have a large chance that, for example, a bank with good project, good investment project may end up with a bad signal, and that may force them to liquidate their loan asset earlier, and that triggers a cost, we call it a false alarm cost. And if we improve the information quality, we actually can reduce that cost ex ante, but because this expected false alarm cost is reduced, that implies the return of the investment gets higher, and that motivates banks to be more aggressive in the deposit market. And then it results in a higher deposit cost. And because of this higher deposit cost, banks are more aggressive in risk-taking because they want to maintain a certain level of profitability. So this study, I think it is interesting. It tells us that when we consider policy in banking industry, we cannot consider each policy in isolation. We have to consider the interaction among them.